Let me know down below if you can hear me and that we have no technical issues. Wow, it's good to be back. And it's been a while, it's been a long time. And believe it or not, it is actually so much more difficult to come back and do a live stream, prepare for one live stream when you haven't been doing lives for 2 weeks than it is when we were doing them, let's say, a few times a week, or back in the day when we did them daily. It's almost like you always gotta start from scratch. So bear with me. I'm excited, I'm nervous. It feels like I'm popping my cherry, like it's my first time here. But it is so good to see that somebody is waiting in the chat. Since, you see, I always feel that the videos that we upload, right, they give some certain pictures, certain information about certain coins. But of course, the live streams is the place where I share with you really my insight, my in-depth, and also, of course, the portfolio. And I mean, the live stream is actually where everything happens. So today, I just wanted to let you know that I'm alive, I'm well, and it's a good day to do a live stream, right? We're seeing the markets, is back on fire. And what is it due to? Well, it's due to the expectation that we will see inflation being tamed, which ultimately will lead to, remember what we spoke about a month ago, we will go over it anyway. You see, I wouldn't call it a prediction, but we were looking at the US debt, and we also understood in order for the US government to be able to service that debt, the Federal Reserve, the US government, is in dire need, straight need. They really need the interest rates to go lower, which ultimately will lead to share prices going higher. We're actually seeing the NASDAQ or the stock market reaching its all-time highs. And then you could ask yourself, is that going to continue? I think it will. And you can ask yourself why? Well, simply due to the fact that we keep seeing the money supply increasing. And we now have, let's say, not a full-blown proof. I mean, we all know it's a circus, right? Inflation is high as it ever was, and money is being printed out of thin air. But if we, according to the, to the government circus, they're taming inflation, and it's only a matter of time, probably after summer, that we're going to see the Federal Reserve start with rate cuts, which will then lead to more money coming in to the stock market, and I believe ultimately much more in terms of percentage into the cryptocurrency market. So that's what we're going to basically, I said it all, but let's start, and I think it goes a little something like this. Yeah, that blue smoke there took a while, right? Even the computer is old. Anyway, I want to welcome you to Crypto Never Sleeps. In case you're new to this channel, and then welcome. Please hit like, subscribe, and smash and all them goodies so that you can be notified every time we upload new videos and, of course, go live. My name is Nico Arachi, and I am a real investor. Okay, guys, let's look at this. Well, let's first of all, today's a good day. Today's a lovely day. Let's start off here with looking at the 4 big ones. We're looking at Bitcoin is up, 6.8%. What a lovely day. What a lovely day to do a live stream, right? With 65,721. We got Ethereum up 3.7% at 3,000. And then we got Solana up 6% at 153. And then we got DOT up 5.6%. It's also funny again, and the reason why I always like to show these 4 charts next to each other is so that we can all, confirm the level of market manipulation. When something good moves, then everything goes up. When something bad moves, then everything goes down. And just another little example of market manipulation. Now, of course, we're going to look at my Betty's portfolio today. Just have a look here, because if we go in and we look at our portfolio, the past 90 days, right? The past 90 days, just look at the chart, how it's going here. We are down, We had the high on March 13th. Now, if we go in and look at this chart here, does it look a little bit similar? A little bit similar, right? A little bit similar. So let's go in and look at my bearish portfolio the last 90 days. And we go in and we look at this chart for the past 90 days. This is Google Trends. And when you put in the keyword Bitcoin, it's funny, right? Isn't it funny that our coin prices, our portfolio is mirroring the interest on Google Trends, right? So it goes without saying, there's going to be more interest into cryptocurrencies and Bitcoin. Well, then we're going to see more interest also into crypto and, ultimately more profits in our pockets. Anyway, I thought that was another example of market manipulation. Anyway, let's look at Bitcoin. You see, we always, sorry, a little frog here. I remember 3 weeks ago, when I did the last live stream, we were looking at the monthly because we hadn't broken, we were still above the 7-day moving average. And I said, yeah, even if we're going to go down to 50, as long as we don't break through at that time 50, we are still above the 7-day moving average. And from my point of view, if we follow this trend line, then things are good. Now, we did see in the meantime, in the between time, we went almost down to 55,000, right? I think the low was around 56. Almost a kissy here with the 7-day moving average. And now we are moving up nicely. If we look at the weekly, which I like to, look more at, it's another good sign. We are currently on the weekly, we are above the 7-day moving average. Now, obviously, we have to close above it in order to be back to good times. Are the good times back to stay? I don't know. Let me know what you think. But it sure is an indication with all that fictitious inflation that we're going to talk about in a second. Let's go and say hello to the chat, and let's then roll on with the little show of ours. So who is here? Let me see. I'm always excited, and thank you. I want to thank every one of you, all 20. We got 20 viewers. There's something funny about that. Shada, meet my soul brother is here. Vax is here. Good to see you. We got my neighbor, the dentist, Atjom. Blockchain Bully. All the lions. And we got Thomas Klima. Good to see you. Ron Jeremy. Good to see you, Matt. Very good. I'll invite you later. And I love you. And we got Dave Singh. How are you? And Murky McDella. I like that name. That rolls good off the tongue. Anyway, guys. Yeah, looks very similar. That's it. Rock and roll. I'm bringing the good times. I'm trying, What do you say? Hi, Nick. Howdy. Good to see you. Phil Marshall. Good times are here. Good times are coming, because we shouldn't underestimate the power, or patience is a virtue, right? And we've been waiting a long, long time. Anyway, let's go in and look first a little bit at the news, and then we will look at the coins. I think that's probably the better way of doing that. So, what did we have here today? We saw the U.S. consumer price rose 0.3% in April, less than expectations. We all know it's a joke, but let's just read a few lines, because you can see it has an impact on the market, right? Maybe we can do it here. I think here, then you also, you can see me better. Anyway, so yeah, it shows that inflation is easing in April. Remember, why is this important for you and I? Well, it is because that we kind of predicted, right, a month back, based on debt of the United States, that the Federal Reserve will have to lower interest rates in the second half of 2024. Now, of course, as it was not my prediction, right? And we will go back and look at those slides. But in the between time, there were, we had macroeconomic data that very much didn't look promising in terms of the Federal Reserve lowering the rates. But that changed today, and we can see it has had a profound impact on even the price of Bitcoin and obviously also the stock market. So that's nice. Netflix here, they got more users. So let's just, so what do we see? The CPI showed an increase. I want to go down here. And so inflation eased slightly in April, providing at least a bit of relief for consumers while still holding above levels that would suggest a cut in interest rates is imminent. The consumer price index, a broad measure of how much goods and services cost at the cash register, increased 0.3% from March, the Labor Department's Bureau of reported. That was slightly below the Dow Jones estimate. Now, this is actually an excellent chart that I actually wanted to, because I wanted to talk a little bit about inflation, because I don't think many of us really understand inflation, right? So just a very simplistic example. This beautiful interactive chart starts here in January 2021. So we can see in January 2021, we got inflation of 0.2, and then we got 0.4 in February, and then we can see in April, we got 0.7, and the highest we had was in June 2022 of 1.2%. You see, we're always talking about that the Federal Reserve needs the target inflation of 2%. And I believe that normal investors, normal consumers, normal people, they will look at this and they kind of think, yeah, if you ask them, 2% target inflation. Yeah, well, if we only had 0.3 in that month, and then it went a little bit 1.2 in 1.1 in March 2022. I mean, that's all kind of good, right? We are below the kind of 2%, right? It's not so much. The thing is, and this is also misleading, this is misinformation at the highest level, because what you need to do is you need to take all these little figures and add them together, and then you actually understand what the inflation was since January 2021. And if we take, and even these numbers, they're probably misleading, because we do know that the US government, they change how they calculate inflation. But let's just use these numbers. So if we calculate them all together, which Betty did for me, we come to 18%, which means if you would have bought you'd spend $100 to buy, I don't know, Coca-Cola, and you would have gotten whatever amount you would have gotten. Now, 3 years later, it would cost you 18% more. Very few people know that. So what the fuck are we talking about, this target inflation rate of 2%? It's all Fagosi or whatever they said in the movie of Wolf of Wall Street. But anyway, we are happy. It's down. We're going to lower those interest rates as it seems. So let me just have a sip here. So the markets reacted positively after the CPI release. Let me just see. I don't need to read so much of all of it. I just wanted to read what here we go. So now let's go down to what Jerome Powell actually said yesterday. So it's a dilemma for the Fed. The reports came with the Fed on hold since July 2023, as inflation has proved more resilient than expected. Policymakers have said in recent weeks that they need more evidence. Inflation is on a sustainable path back to their 2% goal before agreeing to lower rates. The Fed's benchmark overnight lending rate is targeted in a range between 5.25 to 5.5, the highest level in 23 years. In remarks yesterday by Federal Reserve Chairman Jerome Powell, he acknowledged that readings early in 2024 had been higher than expected and said it's likely the central bank will need to keep the current monetary policy at the current rate for longer than had been thought. However, to financial markets, that means the Fed likely will wait out the summer for better inflation data, with an initial rate cut coming in September. That will be the first reduction since the early days of the COVID pandemic in 2020. Now, Yeah, I mean, you can go through all this. However, why am I so sure? I mean, what Jerome says, and the inflation is going to go up or down, it all doesn't matter. What really matters is these slides that we were looking at here a month ago. Remember, the debt situation in the United States is that the debt is rising by 1 trillion every third month, and US interest expenses is rising by 100 billion every 4 months. So these following slides is all about the US government debt interest that they have to pay, right? So the US government debt has much shorter terms than most countries, as rates are currently higher due to attempts to deal with inflation. Previously issued low interest debt is now being reissued at much higher rates. If the central bank doesn't cut rates by 150 basis points, 1.5%, then the US government will be spending 1.6 trillion on interest at the year end of 2024. The other issue has been spending continues to rise, with US government spending past 5 months, 2.7 trillion. I mean, they keep spending and they keep issuing money, but that's good for us and the stock market. And if there's one thing Biden wants, that is that he wants the market, the stock market, to keep going up, going up, going up. That's also why I've always said I believe we're going to see Bitcoin hitting its new all-time high somewhere between 200 and 250,000 in October 2025. It fits perfect with, let's say, I wouldn't call it macroeconomic environment, but with the circus, with the macro circus environment, the theater. It's all being orchestrated in the right direction. We were looking at these, right? So the US national debt is on course to double in just 8 years. So here there's just a chart where we can see that, it will probably be by 40 trillion, somewhere between 24 and 26. This we all know. This is assuming that 1 trillion every 100 days. And we all know that, looking at the debt clock and all that. Of course, the interesting point was here the surging cost of US government debt. So the US Treasury interest payments on a 12-month cumulative. And we can see currently they have to pay, this was in February 2024, 1.1 trillion. This is the cost of the US government debt. What is interesting, and this is actually the main slide here. So here there are, actually just one scenario, the interest payment scenario. And that is, we can see, if we assume here in February it was at 1.1 trillion. If they're not going to lower the rates, the interest rate, if the Fed is not going to do anything, that would mean by the end of 2024, there will be an outstanding amount of 1.6 trillion to pay, right? And if they're going to lower the Fed funds rate by 150 basis points, it would only be an outstanding debt that they would have to pay of 1.2 trillion. And I do think that this has a huge impact on what's going to happen. For the simple reason, the government cannot allow to default on payments. So it needs to be able to keep paying its obligations. And how do they do that? By increasing the money supply and by lowering the interest rates. So we're gonna keep seeing this beautiful combination of more money into the market with lower interest rates. And that, my friends, I believe it's not gonna go forever, right? But I do believe that that's gonna take us to the third cycle, as I said, October 2025. Let me know what you think, because I'm done here with today's lesson. So let me just see. I mean, it is since I am so rarely here, it's hard to keep a structure also on these streams. So I hope as always, I hope I give you some value. But we will now talk a little bit about the coins. Going on there, let's hope even make it. I like Lee. Yeah, let's hope we're gonna make it to 2025. That's sure. Anyway, yeah, let's go and have a look at Betty's portfolio. Just remember, we're looking at Betty's portfolio. The reason why it's Betty's portfolio is because I own nothing and I'm pretty happy. Betty owns everything, and she's pretty fucking miserable, but that's how life is. Actually, what I want to say is everything I say and do here should not be considered financial advice. You need to do your own research. Yeah. So before, maybe, I mean, I always think, because going through the portfolio, that's a big thing. It takes a long, so just see if there's one thing that I'm happy to mention, is that our energy web token position is not down as much as it used to be. But I think let's go over here and look at the watch list. I think it's better because we can. Let's see if there's some good ones. I wanted, because the reason why I also wrote on the thumbnail is I do believe that there's not a lot of time left until we're really going to take off. Now we could see a black swan event that will trigger the prices to go down, severely, but only for a short period of time. So as always, it's good to look from the all-time high and see which coins they are, or from the old, how much percentage potentially we could do. Cardano is still 86% down from its all-time high, right? Which I think is lovely. Polkadot 87, Bitcoin Cash, which I absolutely love, speak too little about, 89%. Chainlink is you gotta keep and Chainlink in your, if you're a seasoned investor, a conservative, a blue chip investor, down 74%. Uniswap, these are like the blue chips. And I feel like I'm repeating myself like a little parrot, right? Like a little black parrot. But there will come a time, and I think it's within the next year, where we're not going to be able to see these discounts, and we will only be looking at, at selling our positions in a year's time. Anyway, Uniswap is, of course, it's a non-brainer, right? It's their automated market maker, down 84%. It's so much volume is going on there. Uniswap version 4, I don't know if it has been launched or it's being implemented by specific institutional players that's going to enter. We are seeing consistent development across the board. Hedera down 81%. Great. Filecoin, decentralized storage, down 98%. Stellar, down 89%. But Stellar is doing lots of real world business. Just look in Ukraine, we are connected here. I say we because I live in Ukraine, right? We are already connected with this DApp, the DIA DApp, where it's connected to our, when you go to the doctor, to our residence permit, to our bank account. This is maybe something, I need to look at you in the eyes to say, here in Ukraine, we already have an app that is connected to our bank account, to our, health, medicinal, whatever it is, and even how often you buy yourself a beer. No, not with the beer, but it's a test, and this test is already on the blockchain, and it has been provided by Stellar. So, Stellar, their universe, there's too little time, unfortunately, really to dig in. But Stellar, I have to say, Arweave, of course, Arweave is only down 49%. So I wouldn't. That's why Arweave is love it, but maybe not today. Maybe there's better opportunities with the graph that's down 90% from its previous all-time high, right? VeChain also down 87%. It's also good. Theta Network down 87% from its previous all-time high. I would look at those, right? Algorand, 94%. Aave, 87%. It's nice to see, right? Chili's, 87%. We're launching a video. But my absolute recommendation of today, even though I'm not allowed to recommend anything, is synthetics. Synthetics is down 91% from its previous all-time high. And if there's one thing synthetics is doing, is just keep growing, keep expanding. They're seeing increased in volume. And I thought it might be worth just looking at just some recent news, right? This is from April 28th. Synthetics Perps launches 14 new perpetual futures markets on Base. I mean, all over the place. But this is good and it's very interesting. But if you go in and we look for the first quarter, this was really, really something. Let's just go in here where they're saying, so, since its launch in 2023, total value on Base has hovered between 300 and 500 million. During the month of March, that figure doubled and transaction volume has increased substantially because they're now, synthetics is basically providing lots of liquidity on Base. And also on Optimism, which was another major event, the perps volume on Optimism surpassed $50 billion. I mean, it's perhaps, and it's like synthetics is the backbone liquidity providers when it comes to perpetual futures, basically. I look at that. That's the recommend. I've talked, and them I have recommended many times in the past. And if we look at our portfolio, since we got it in, let's check it out. With our position with synthetics, we're only up 58%, right? So I mean, this is almost as close as it gets. Anyway, for those of you who think synthetics is not so interesting, I mean, I know we got to look at those meme coins too, right? You know, we're not looking at no meme coins. So where were we? Synthetics, as I think is great. Genosis is also good, but only down 74%. I would not go into IOTA. PancakeSwap down 94%. I'm sure PancakeSwap is gonna see good times again. Curve down 99%. I mean, we have increased our position in Curve, but there's some sentiment that might not be 100%. So there, maybe I would watch out a little. Compound, yes, down 94%. There, I would increase. I would absolutely increase my position in 1inch network, down 95%. It's the aggregator. There are so many that are good here. Radium down 90%. I also think is great. CeeLo 93%. Seacoin 94%. Decentralized storage, right? And Scale also very good. The ones I'm mentioning is maybe the ones of right now today. Kusama 95%. Moonbeam, of course. Pocket Network. And that's about that for sure. Katesi, 89%, also down from its all-time high. Goldfinch, we've done pretty good with Goldfinch, right? It's at $4. There, everyone should have gotten in there 2 months ago or 3 months ago when it was that we released it. And that's about, I think that's for now, that's enough. Let me know if you guys have anything that I should get myself involved with. Of course, Kilt. 98%. Crossed Network down 99%, but these also, I mean, they're just, we talk about the same and the same and the same. I also think Pokédex could be, but that's more of a high risk, I would say. And Umbrella down 99%, yeah, but that's also high. No, Umbrella I also think is a good, but I don't know. I mean, they've also lost 37% in the past 30 days. I mean, that's probably also good risk reward potential. insurers, I would still also, I mean, unless something has really changed here in the past 2 months, insurers, good insurance protocol, working, doing, expanding. Unless some news that I oversaw. Okay, guys, I think you get I think you get my my point, right? And that's all I gotta say about that today. That's all I gotta say about that today. So let me just see. I hope you found some good stuff. It's already been a painful year. It's been a painful year. Anyway, guys, I love you all. I thank you so much for having been here. And that's about that. That's about that. I'm going to NSE tomorrow again, and to see my boys, and those of you who know. I love you so much. Thank you. And I think all we need to do is stay patient and never give up. And we don't. See you next week. I love all of you. No plan B.